of the day, which I pick, stand out today, Boral, the building material supplier, jumped today after a post of 53% rise in net profit after tax in the half year, supported by revenues 1.68 billion. Despite the solid result, the board has opted to not pay an interim dividend. Chief Executive, new Chief Executive, Vic Bansal, said he was pleased with the results given the challenging inflationary and operating environment, but the company is capable of much more. Talking up big, Boral said it expects earnings for the second half to be broadly in line with the first half result. Whisperer, what did you think of the Boral result? Shares up 11% today. Of course, if you're a Seven Group holding shareholder, you'll get the benefit of that because you're the biggest shareholder in Boral.
Yeah, Koshi, it was a far better result than what the market was expecting. And to your point, it's hard to bet against the Stokes family. They were quite opportunistic going in there and acquiring, what have they got, about 70% of that business now, installing a new CEO. Who, albeit early, and I'm sure a lot of the work had been done previously, but certainly riding on the coattails of the work done. And I think the market in particular really liking that cost control message. And there was quite a definitive statement at the end of that release saying there will be no price erosion for Boral. So in other words, despite there being inflationary pressures, not seeing any of that margin pressure. So I think the market really sort of took to that. Prior to the result, consensus for Boral was around 345, and generally what you will see is because it was such a strong beat, the next couple of days you will find analysts actually trying to play catch up, putting in these sort of better numbers into their system, into their forecast, and therefore you would expect there to be even potentially a little bit more upside. So short term, as a momentum trader, there's probably a little bit more in it. But equally so, it's a pretty challenging macro environment that we're operating in at the moment. We just got interest rate rise number 9. Certainly 10 is around the corner for March, and who knows, maybe even 11 for April. And what will that do to housing demand? So macro environment challenging, but short term, if you're a momentum trader, you would buy it, Koshi.
Right, okay. So, momentum trader for a buyer, but for an ordinary investor?
I think, my famous saying, one of my famous sayings in Andrewism, you might say, Koshi, it takes 2 or 3 days for good or bad news to wash through a company. So I would probably, if I was sort of a humble long-term investor, I'd wait for a pullback, and that would be the opportunity to get set.
But hold it if you're in it.
Hold it if you're in it.
Right. Henry, what do you reckon of the Boral result and the company? James Hardie has been a bit more favoured in that space over the last couple of months.
I was a big fan of James Hardie. It's been, of course, it is very much more geared to the US than Boral is. So maybe that's the reason. But it's an interesting result, I guess. The new CEO managing to do both ends of the scale, in effect, by raising prices, and we've got more prices to come, more price rises to come in cement, asphalt, and quarrying products. Clearly they have pricing power and cost discipline as well. No interim dividend. I guess Kerry Stokes doesn't need the money. He owns 73% of this one. So they're keeping their powder dry in that respect. But I thought the comment from the new CEO, Vic Bansal, talking about the 9 interest rates so far from the RBA hadn't crimped demand by customers yet. And clearly, being a dominant player in that space, they do have pricing power. I guess, at these kind of levels, it is definitely a hold. And as Andrew says, It will take a little while for it to move through the market in terms of upgrades. And I suspect we'll get some upgrades. But bear in mind that 73% is locked up. So there's not an awful lot of free float there. So it doesn't take much to get it rocking and rolling. I guess the takeaway for me is, what does that mean for others in the sector? What does that mean for CSR? What does that mean for Adbri? What does that mean for brickworks in terms of cement pricing, in terms of plasterboard pricing, in terms of their ability to pass on the inflationary pressures that they're seeing to customers? And at the end of the day, the customers may just say, you know what, we've got no choice. We're just going to have to pay the price because where else do you go? That is the question. So I think it's probably a sign for the sector. I think
a good sign.
I think it is a good sign. Yes, at the moment, we're not seeing the demand being hit by Mambo number 5, or as Andrew says, the RBA number 9. But we're not seeing that demand be hit yet. Of course, the mortgage cliff is coming in some respects. It's a bit like Ava Gardner and Gregory Peck standing on the beach in 1950s Melbourne and looking at that radiation cloud that's coming over the horizon as the submarine taps away with its Morse code-like signal. So, we know it's coming. It's just a question of how bad it is when it hits.
Right.
But certainly from those Boral results, it does seem pricing power and cost control is the key to it. Let's see if the others can do the same.
Yeah. Professor's right into it from the very start of the program with the analogies. That's fantastic. Andrew, impressive.
I'm in lots of trouble, Koshy, if that's what he's starting with.